Let's get back to the markets and the trends that we're seeing with someone who can follow these as well as anyone. Fairlead Strategies founder and managing partner, Katie Stockton. She's also a CNBC contributor. And just like last time, we definitely want to talk stocks. We definitely want to talk fixed income and bonds. And maybe we'll touch on Bitcoin because they've all moved since the last time you were here, Katie. And I just had a laugh because are we going to be talking about the October lows, but no longer 2022? There's now October lows for 2023 that we can talk about because we went from the October 22 up to August, and then we had that decline into October, and now we're up 9 straight days in the NASDAQ. Are those the new support level, this year's October lows?
The support level that we were watching, and I feel like everyone was watching, was roughly 4,200. We had it at 4,180. And as you know, in our discipline, we always make sure that breakdowns are confirmed. We like to see consecutive weekly closes below a level, and that didn't happen. So with that sort of violent relief rally, we have an unconfirmed breakdown, also called a shakeout. A shakeout means that the weak holders of the market were shaken out, and that actually is a positive development. It does suggest that we'll see seasonal strength November, December off of what is this kind of standard seasonal October low. So we still have that support intact in our work around 4180. And now it's a matter of getting through resistance. And I actually wish the relief rally was a little bit less explosive because those kinds of rallies are more common in bear market cycles. But we'll take what we have. And, we've already seen the 50-day moving average cleared by the S&P 500. There's some minor resistance around 4,400. And above that, we start talking about a return or retest of the highs, which are much more significant resistance, roughly 4,600.
What ignited it, or one of the things that ignited the equity move, was that really precipitous drop in yields last week, towards the end of last week, especially in the 10-year. Does that change your outlook for the 10-year going to new highs in yields?
Well, it kind of helps the outlook, of course, for equities, at least for now. We've been calling for consolidation or a corrective phase in yields, and that's not a big call. I mean, it follows a pretty massive and very steep up move, and we think that that will continue. So we think the pullback shows enough of a loss of momentum behind yields that it will be somewhat persistent. And I think we talked about this last time. TLT, which is, of course, a common treasury bond ETF, has its first counter trend buy signal since flashing a sell signal on its monthly chart in April of 2020. So it's the first indication that we really have in our work, and that's starting to happen in other yields and metrics as well, that this could be actually more of a prolonged corrective phase, something that lasts maybe 9 to 12 months as opposed to just through year end. And that to me would, of course, be sort of a tailwind for equities. I think we're being hopeful at this point that that's a valid signal. We don't have proof yet that it's been confirmed. We don't have enough stabilization to suggest that that's definitely high conviction or anything. But it is promising, I think, that yields should come off. And actually today in our research, we published a chart of 30-year average sort of mortgage rates. And they also have a signal to suggest that those should come off their highs. So I think that's something that, of course, home building stocks will welcome. But even beyond that, it would just affirm what we're seeing in terms of counter trend signals and treasuries in general. I wouldn't just talk specifically about Bitcoin, but it actually does seem to inform some of the moves in stocks occasionally. But I thought if it got through, I think you said 35,000, that was it. That was an important level, but then not much. I think you only said, what'd you say after that? 36,000 was important. So it is above 35,000. I saw a Barron's piece that said it could be, if it stays here, it could be above 40 near term. Is 40 in the cards yet in your work? Yeah, so we saw that base breakout a few weeks ago from Bitcoin. It got above our cloud-based resistance level. And the secondary resistance was, as you mentioned, around 36,000. So this is a natural place for this strong up move to take a brief pause. If that 36,000 is cleared decisively, then we have next resistance just above 42,000. And that's based based on a 50% retracement of the bear market cycle that preceded the base breakout for Bitcoin. And, we have seen the correlation to the NASDAQ 100 index sort of resurface here, but it's obviously not something that we can depend upon. I think, if anything, we can just generally look at Bitcoin in the morning and say, well, if Bitcoin is up sharply, it's probably not a big risk-off day more broadly.
So not just 40, but it could indicate above 42,000 if it gets through 36,000.
And we're seeing much better sort of action, momentum behind the altcoins as well. I know Chainlink was one of them. Ether is participating, certainly. So it is somewhat of a broad-based move in the cryptocurrency market, in the same way that we've seen breadth improve for equity. So participation in the stock market rally has been much broader than we saw during any of the past oversold bounces since the summertime high. So I think that's encouraging. If it's something that is sustained, that would be a bullish development.